Yo, what's good, guys? Historical sell-off on Friday combined with Thursday, and if you were in the markets and you were watching that, that was insane to watch. But as usual, it was expected. Been calling for this move down for the past few days. Last week, a little over a week too. So yeah, here we are. We're at these really important stress levels to see if we really start crashing or not. But yeah. Today's going to be more of a special video. We're going to be looking at some important data such as the 10-year yield, put to call ratios, and comparison with the charts from 2008. So yeah, let's pull up the charts. This is one of my more important videos. I really recommend watching through this whole thing because not many other people are going to be looking at the stuff and telling you these things. So yeah, watch this whole thing through. This is one of my more important videos. Yeah, with me saying that, that means something. So here's that sell-off we had. That was insane, but it was expected. The only surprising part was I didn't think it would happen this fast. I was expecting this to happen over the course of a few days, but we did it in 2, so yeah, I mean, I personally am aiming for a bounce soon, but with the situation that we're in, I can't really be like, oh, it's oversold, we're probably going to bounce soon, because RSI is seemingly irrelevant right now. But we are very oversold, so the lower we go, the higher probabilities we bounce from these next Fibonacci levels that we're hitting. So here we are. We hit my target for 27, high for 26s, and yeah, that's what I was aiming for. We had this bullish scenario, but I was leaning towards the bearish side. But with risk management, you have to keep every scenario in the picture, so that's why I kept that there with the chance that we could bounce, but that didn't happen. So we can get rid of that and get rid of this, and here we are. So it seems like we get relief. Yeah, we're just gonna take a look at these levels. So on Friday, we let me make this a little more accurate. So yeah, you can see right here, right on the dot, we came down to this level, we bounced. Let me zoom in a little. We bounced on the dot, literally on the dot. So on Friday, I bought, I went long right here, cause it was a guaranteed bounce in my eyes. I called out that level. We bounced perfectly from there, but this was the interesting part of this. So right when we hit that level, I started looking at the retracements where we could go from there. And because this is what I'm assuming is 5 waves down, messed that up. But I was assuming with this being wave 1, wave 2, wave 3, we were oversold, and I'm like, okay, we gotta be going into wave 4 right now. And so we started moving up, and the targets for wave 4 are these. So if you're learning how to do Elliott wave theory and Fibs, and you want to learn how to measure out these targets for each wave, this is it. I'm also going to be doing some tutorial videos on supports and resistances, Elliott wave theory, Fibonacci levels, maybe even harmonic patterns. Yeah, I just want to share my knowledge with you guys, and let me know in the comment section what you want me to do videos on, because I mean, I know a lot of things that I can share with you guys. So yeah, let me know what you guys want to know, and I'll be doing videos on them, probably starting this week. So yeah, let me know in the comment section what you want me to do tutorial videos on, from beginner to advanced technical analysis stuff. So yeah, keep your eyes out for that, and let me know what you guys want me to do. So back to this. These are the targets for wave 4: 0.146, 236, 0.382, and 0.5, 50% right here. So these were the levels I was looking at. And once you hit that first target, there's a chance that you can keep going lower. And you usually want to tie that with RSI and MACD and see like, okay, is there more downside or not? And just looking at the RSI, I mean, I was like, okay, we gotta be reversing here. We hit that level and I was like, we're oversold, so we're gonna bounce. We bounced, but that was not a big bounce at all. And we kept going lower, so it's possible we are already in wave 5. And because this is kind of a special scenario that we're in with the market just relentlessly selling off, it's hard for me to say where we won't be bouncing from. So I'm more just going to be giving targets and what I think, where I think we're going to go, and we're going to be taking a look at that data. So watch this whole thing through. This is my most important video by far. So we had those targets, we hit that first one, and we just kept going lower. So it did the bare minimum. That's all it had to retrace to and kept going lower. So if this is wave 4 right here, if this is really wave 4, this is what we're looking at, these levels. I mean, this looks so off to me. I'm not really familiar with a chart that looks like this because you don't really see this ever, especially on SPY. So it's possible that this is just a deeper wave 3. Even though we hit that level, got rejected, maybe this is still wave 3 and we're still just going a little lower. Which first, actually, I'm gonna put up those targets. So maybe we're going to 412. I mean, that's really far away. We're really oversold, but in these conditions, it doesn't really seem impossible. So watching 412 area as a next area to go to. There's that psychological 420 support, which we were close to, and if we do that, we can consider a reverse head and shoulders, which in this scenario would be an enormous, monstrous reversal. So you have shoulder here, the head here, and potentially another shoulder here, and that move up is going to follow this move down. So head and shoulders, watch out for that one, because that's a possibility right here. We're going to put up trend lines. Right here you have this trend line, you gapped through right here. We filled the gap and just kept going back under it. You have this here, which we're resting on right now. Guess we'll do this one too. You can see we fell through that one. Kind of we tried to make a move back up to it. That didn't work out. We got rejection, kept going lower to this support, I guess. So right now you want to watch for these trend lines. Potential areas where we can bounce from. So yeah, maybe we bounce here. We're at that level. We're so oversold. So maybe this is still wave 3. We can retrace wave 4. Retrace into wave 4. And so if this is our bottom, I'm not assuming we've bottomed out yet. We may still be going a little lower, but if we bottom here, just a few minutes ago I put out this target for wave 4, so here, 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 and here. Personally, I think I'd be aiming for 435. I don't know, it's honestly hard to say with these conditions, but a big thing to watch, this is something that we can work with, is a gap. Gap right here, tiny, but it's a gap, gives us just another thing to work with, and that is right under the 0.5. So potentially we're going to the 0.5 at 438, massive bear trap. We just squeeze up to that. Yeah, I mean, we'll see if we fill that gap or not, the gap at 438, so watch for that. We're going to take a look at this data now that I've been wanting to show you guys. So first off, we're going to take a look at this comparison chart with 2008. This is just comparing the percentage sold off by and what it might sell off into. So you can see we're roughly following this. Maybe we have a bull trap here or bear trap here. Catch more investors in long positions, and then we go into a recession during the summer. That's totally possible. So that's something you really want to be watching here. You know, that head and shoulders maybe kind of looks like a head and shoulders in 2008. So the other thing we're going to be looking at is the put to call ratio. I think I can put it up here. Yeah, let's do that. Let's move some of these. And yeah, so right here, this is the put to call ratio, basically representing how many calls are being bought and held at this given time. And you can see here, it's very high. It's very high. And what's interesting to note is that every time we have these massive sell-offs, it starts to peak around here, almost on the dot, as an indicator, as a potential indicator of a bottom. So you see this, we spike, a lot of puts being bought and held, we bottomed out and we start reversing. Same here. You can see that January, February sell-off, a lot of puts being held and bought. We bottomed out, and now we're here. So yeah, it's possible we reverse from here. We hit my level. What else? We're so oversold. You have a head and shoulders pattern set up. You have this trend line. There's a lot of things that can line up for a potential reversal here. So in my eyes, I think I'd be aiming for a reversal here. Trap a lot of bears. Squeeze them out again. And yeah, so this is another thing to watch. And I think probably one of the most important things by far we're going to take a look at is the 10-year yield. And I'll break this down so for those of you learning can understand this a little better and apply it to trading in the future. So 10-year bond yields. So to simplify it, I guess this does have a correlation with the equity markets, and in normal conditions, there's a positive correlation with this, where when this goes up, the equity markets, such as stocks, they go up too. But in an environment where there's inflation, which we are in right now, that correlation becomes inversed, so that when 10-year bond yields are going up, equity markets are going down. And right now we're testing a trend line that has been running for more than 30 years, 35 years, over 30 years. So that's 3 decades. That's insane. And if we break out here with the correlation that we have, with this going up and equity markets going down, it could get horrible. So what you want to note about this is that in this area, we have tested this with zero consolidation. So, and it's a big trend line, and the fact that we have pushed up to it without any consolidation can result in a rejection, temporary rejection. So, yeah, it's possible we don't break out here just because there's no consolidation up to that resistance. But it's hard to really analyze bond yields because they're just hard to analyze, I guess. When you look at the RSI, it's higher than it's literally ever been, which is crazy. So yeah, possibly it reverses here, and equity market get to breathe a little. But yeah, that's something to watch. If this breaks out, it's going to be really bad. So back to the charts here. We can take this off. Just those things to watch. You know, those trend lines, the fib levels. It's likely we bounce here, I think. It's likely we bounce. You have these trend lines right here. You have a gap up there. We hit my first target. We're really oversold. So everything's really lining up for a reversal. You saw that put to call ratio being really high with us having an enormous sell-off. So the probability is extraordinarily high that we bounce from here. I think that's what I would be aiming for. Watch for a reversal soon. Yeah, head and shoulders too. Yeah, it's pretty interesting. This is the first time, I think, first or second time that I've been experiencing this scenario with such a relentless sell-off. Guess you can compare it to January, but I don't know, I think this is a little different. So yeah, we'll see where this goes. I mean, I think the next lower level to be watching is gonna be 412, I think. Actually 420, then 412. There's supports in between 420 and 412, but 412 is just that next level we have, and then 420 is psychological. You also have a gap at 418. That's something to watch. This can easily be an incentive for SPY to go lower to fill that. You have the gap up here at 438, wherever that is, right here. Yeah, so it's a scary area. We have the recession right on our fingertips. It's pretty scary. You know, the housing market, everything's gonna be coming down soon. A couple months before 2024. Who knows? Last week I said it could be starting this week. Yeah, we'll see where this goes. It's pretty scary. I'm scared. SPY's just kind of on its last breath, I guess. So yeah, I don't know. Take what you can from this video. I think we bounce here, get some, get a breath. But with this situation we're in, with institutional unloading, it's possible we go lower. Technicals point that we bounce, but you know, a special scenario we keep selling off. So that's gonna be it for this video. Really hope you watch this whole thing, because I want you guys to be educated on what's coming. Yeah, I mean, stay safe, manage your risk. Maybe going low, but I think we probably bounce short term. So yeah, peace out, guys.